Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 20th, 2026, and we're diving into Hancock Whitney's latest earnings report for the fourth quarter of 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Hancock Whitney has just released their Q4 2025 earnings, and there's a lot to unpack, from their EPS performance to strategic initiatives.
EPS performance and analyst expectations. Let's start with the earnings per share. Hancock Whitney reported an EPS of $1.49, slightly above the forecasted $1.48 from a survey of 5 analysts. John, what does this tell us about the company's performance?
This slight beat on EPS indicates that Hancock Whitney is maintaining strong profitability. Their net income for the quarter was $125.6 million, which is consistent with the previous quarter. This stability is a positive sign for investors, showing that the company is managing its operations effectively despite a challenging economic environment.
Revenue and profitability overview. Moving on to revenue and profitability, Hancock Whitney reported net interest income of $284.7 million and non-interest income of $107.1 million. How does this reflect on their overall financial health?
Their net interest income saw a slight increase, which is encouraging. The non-interest income also rose by 1% from the previous quarter, driven by service charges and other income streams. However, the net interest margin slightly declined to 3.48%, which is something to watch. The efficiency ratio of 54.93% indicates they are managing expenses well, maintaining a strong operational efficiency.
Loan and deposit growth. Hancock Whitney reported significant growth in both loans and deposits. Can you elaborate on these figures?
Absolutely. Loans increased by $362 million, or 6% on a linked-quarter annualized basis, driven by strong healthcare production and equipment finance. Deposits grew even more impressively by $620 million, or 9% LQA, largely due to seasonal public fund balances. This growth in both areas is a testament to their robust business model and market position.
Asset quality and capital position. Let's discuss asset quality and capital position. How is Hancock Whitney positioned in these areas?
The allowance for credit losses coverage remains solid at 1.43%, and their CET1 ratio is estimated at 13.66%, which is a strong capital position. They also repurchased 2.54 million shares, fully utilizing their existing repurchase authority, which reflects confidence in their financial stability and commitment to returning value to shareholders.
CEO's perspective and strategic initiatives. John M. Hairston, the CEO, mentioned several strategic initiatives. What are the key takeaways from his statements?
CEO John M. Hairston highlighted their focus on loan growth in healthcare and equipment finance, which are key areas for future expansion. He also emphasized their commitment to enhancing shareholder value through a new share repurchase plan and margin enhancement strategies, including a recent bond portfolio restructuring. These initiatives are aimed at sustaining growth and improving profitability.
Key takeaways. In summary, Hancock Whitney has delivered a solid performance in Q4 2025, with an EPS that slightly beat expectations, strong loan and deposit growth, and strategic initiatives that position them well for the future. John, any final thoughts?
Hancock Whitney's consistent performance and strategic focus on growth areas like healthcare and equipment finance, along with their shareholder-friendly actions, make them a compelling investment prospect. Their strong capital position and operational efficiency further enhance their investment appeal.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, Please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Hancock Whitney's performance in the comments below.